I remember when I could go into my local coin shop and pick up $1,000 in silver bullion on almost any day. Yesterday I stopped by and he had about $3 face in US junk silver on hand. I wonder if this story is being played across the entire country. We are coming to a point where physical metal may become impossible to obtain, even though the COMEX or LBMA prices are still held within reasonable bounds. To quote Egon von Greyerz of Gold Switzerland, "We now live in a world where governments print worthless pieces of paper to buy other worthless pieces of paper that, combined with worthless derivatives, financial assets whose values are totally dependent on all of these worthless debt instruments, most of these assets have become worth less." Gold and silver seem to be one of the only reasonable assets in an unreasonable world. Knowledgeable investors in this sector already know that the average long-term price ratio between gold and silver over roughly 5,000 years has been approximately 15 to 1, and that was when silver was truly abundant in the world. With silver stockpiles exhausted, it would be silly not to expect silver to breach that ratio on the upside. Given that the price of gold is at $1,400 an ounce, that implies silver hitting $100 an ounce even if the price of gold was to freeze at the current price. No one who understands this sector expects this to happen. Adjusted for real inflation, gold would have to rise to over $7,000 an ounce just to equal its previous high in 1980, as calculated by John Williams of Shadowstats.com. This means that it is certainly not beyond the realm of possibility that silver could reach a 4-digit number over time. John's summation of 2010 and prediction for 2011 seems self-evident. 2010, a year of depressed economic stagnation. 2011, a year of increasing economic and systemic difficulties. Gold outperforms Dow for the 7th straight year. From silver analysts to silver mining executives, anecdotal reports are rolling in that even industrial users of silver are having greater difficulties in locating available stock for their businesses. This seems to affirm Carl Denninger's take that the economy will be attacked on two sides: margin compression and deteriorating consumer purchasing power. He states, "The issue remains this: pick your poison. They're both bad. Either margins compress or consumer purchasing power gets trashed. In a world where labor is instantly arbitraged overseas, there is no way to couple price increases back to wages for the vast majority of Americans. The average American does not possess any way to leverage these price increases back into their economic situation and thus grow their purchasing power at least as quickly as prices go up. This makes it impossible for manufacturers to pass through the increases in material costs. In other words, as oil, industrial metals, and wholesale commodities increase in cost, company margins will continue to shrink because they will not be able to pass along those prices to a destroyed American consumer." So the question is, what should you do now? At Royal Metals Group, we believe that precious metals should be an important part of every client's portfolio. We believe that as much as 20 to 40% of every client's portfolio should be in hard assets to protect them from market loss, inflation, and a fluctuating currency. Please subscribe to our channel on YouTube and review our website for more information. If you are an index annuities agent or a financial advisor, consider moving your clients into silver and gold and become a registered representative at www.royalmetalsgroup.com.